rampite.
Hello everybody, welcome back. I'm going to make this as quick as I can because obviously half term and I don't know how long I've got. I'm on borrowed time. Got a 4-year-old running around the house making so many demands on me. I've been making potions, baking flapjacks, doing absolutely everything. That was before 10 o'clock this morning. So let's get started, and we're doing the live stream tonight for the Patreon members, so yeah, we'll go into details there. So as of right now, we're finding a bounce from some key areas, a key area, but based on a few different time frames. There's a few things that have kicked in to allow this move up at the moment. It's not massive, but it's not continued to go down immediately, and that's good. Because as we were saying yesterday, we've come into the last line of the sand, really. And what I mean by that is that we'll start first of all with the monthly. So sometimes it's easier just to see the most basic of basics. This is I've just brought up the Binance chart here, and just so you can just see a simple Bollinger Band, right? Bitcoin monthly Bollinger Band. Now this is only the Binance chart, but we looked at this on Bitstamp, and effectively, if we close below a monthly Bollinger Band, it's bear market, and we go down. We measured it out, 65%, 50%, and if we did do it this time, it'd probably be between 40 and 50% further from where we are right now. We sort of toyed with the idea of going below 20, but it could easily, just consolidate, further, and maybe just dump down into the 20s, lower 20s, whatever. And that was all very, very likely if we close monthly candles below this 20 monthly moving average, aka the Bollinger Band Center, right? It's one of those things. Sometimes you just need to strip the chart down to its absolute bare bones, and you can see this state of what's really going on. The Bollinger Band's pretty much one of the basics, but easiest things to run on, really. When you're in a bull market, when we were in the epic bull market and the alt season from last year, I was doing the live streams, and people were asking me, what about this, what about this, what about this? And I say, well, look, we're in full swing. So long as the money flow index isn't peaking above 90, just it's a matter of buying a dip. And the best time you could ever look to buy a dip in what we would consider to be a bull market would be a retest of the centre of the Bollinger Band. So that is what we've got. We got that again yesterday, effectively coming back down to the centre of this Bollinger Band. And finding a bounce from it. Now, obviously, the month is getting closer and closer to ending. If we close the month looking like this, you'd have a candle body green, but this is what's called a shooting star candle. This does ask to be brought back down further. Now, there was a little anomaly wick down here, of course, and sometimes we think outside of the charts is what you have to do, and there are things taking place outside of these charts at the moment which do need serious attention. We've got Russia and Ukraine. We've got quantitative tightening, Federal Reserve monetary policy, and all these things, they do have impacts. Obviously, they do have an impact, and most of the time, these things are priced in. As far as the Federal Reserve is concerned, I'm pretty sure most of that is priced in. But when it comes to what's going on in Eastern Europe, obviously those developments unfold on a daily basis, and anything can happen which could cause ripples in this chart, whether it's up or down. Or down or up, it doesn't. It depends on how that sort of thing unfolds. That isn't particularly priced in, but the monetary policy, Federal Reserve, I think most of that is priced in. And so the reason we're having a quick look at this is that there was an occasion where we came down below it and closed ever so slightly below it, and it was the March crash, wasn't it? When the virus kicked in, the virus came out. Oh my God, the virus! And then we were consolidating quite hard here. This is similar to what I generally think is what's going on right now. We had a massive parabolic run. The bull market started. Everybody got overexcited, and we consolidated for over 6 months to the tune of almost 55%, right? It was pretty nasty, month after month, week after week, day after day, the pain. And then just as we managed to get a support on the centre of this Bollinger Band and got a decent retest and an uplift, things were looking good. No, the virus kicked in and brought us down below it. However, it wasn't to be. It wasn't to be. Look at that wick all the way down here, closure over here, and then carried on to go on to do its bull run, really. In a way, it is kind of the sort of vibe I'm kind of feeling right now. A consolidation of a large extent after a parabolic run, because this was a parabolic run. The bottom of the bull market began here. We went up 300%, nice one, and then we went down 55%. Oh dear. We were about to recover, reaccumulate on this Bollinger Band center. the things outside of this chart kicked in, brought us down, and then we carried on because, again, it is only just news. It doesn't take away from the overall direction, fundamentals, and projection of the chart. So it is a kind of a similar vibe and an obvious place for it to bounce. And again, that was the center of this monthly Bollinger Band. So we'll just go back to the short-term time frames. Again, simple Bollinger Band strategy. In fact, we'll just bring it to a daily. You'll be able to see it here. Daily Bollinger Band. Okay, so we broke down below it. Okay, bears are in control. Coming down to retest the bottom. Okay, Bollinger Band strategy kicks in. Most of the time, whether it's in an uptrend or a downtrend, Bollinger Bands take 95% of price action takes place within a Bollinger Band. You stretch yourself out, you get reabsorbed back into it. Look for a retest of the center. Coming all the way down outside, it gets reabsorbed back into the center. 95% of price action takes place within the Bollinger Band. So that's what's going on right now. We came down, dipped our little toes outside of it, couldn't take it, sucked back in, and now we could be moving up to the center of the Bollinger Band. Again, simple stuff really. Bollinger Band strategies, they are good. They're very, very good. It's simple stuff really. It's basic moving average with expanding moving averages above that, depending on the volatility of the range. So, me, I love moving averages. Why wouldn't you? And this is the best one you could ever use, the 20. It's the 20 simple moving average really. I like to go a little bit crazier, which is why my charts look like this, but and they've all got relevance to it, but if it came down to it, the Bollinger Band is just it's fine. It's fine in itself, and you've seen on the monthly and also there on the daily that it's working, and we're getting a bounce from obviously this area down here from yesterday, which was also not just the Bollinger Band bottom, but the Bollinger Band center of the monthly. So an obvious place for it to bounce. Right, so now let's go back to HyperTrader where we got a little bit more stuff going on, and we'll take it to the 4 hourly. Yesterday we were talking about the bullish divergence which was brewing, and now it's clearly playing out. Outside of that, we forget about the Bollinger Bands and the moving averages in this instance because it's just a 4 hourly. We do have this area which is retested. It's a horizontal. It had some relevance to it. You can see that if we zoom in. We'll just take the itchy cloud off for now. We don't need any of that. Just to get a little bit noisy on this chart, I do admit that. So yeah, rejection here, rejection, support, rejection, support. So there was an intermediate area of support around here, and that's where we managed to base ourselves. So the 4 hourly, bullish divergence. On the monthly, major support based on the moving average, make or break type of thing. And on the daily, Bollinger Band bottom. And so yesterday I was talking about what it would take for it to break down below these areas and go into a further I spoke about a potential 50% drop really, and that would be a breakdown of the monthly Bollinger Band center. And historically that's what happens, not in this instance, but a bear market we start to stumble on here, and then we start to close, we have a retest of it, and then that's it gives it up 65%, 50%, and in this instance I think it would be less if it were to happen, maybe a 40% or so. It's difficult to say exactly where it will go, but it would be a pretty nasty dump if that were to happen. That's number one. And number two, we spoke about the Ichimoku cloud on the weekly. In fact, I'll just carry on with this Binance chart because I appreciate we can just turn things on and off, and it looks a lot simpler really, so it's not as cloudy or messy. Bollinger Band, a simple Bollinger Band strategy is out. We've done that. Now what we'll be looking at is a closure below the cloud itself for this Chiku span. That would be a short signal. We've already got 3 of the 4 components. Well, actually no, at the moment we've got 2 of the 3 components. We've got two of the 4 components. So we've got a red portion of the cloud, we've got a cross, negative cross, and now what we'll be looking for is price to close below the cloud and the Chiku span to close below the cloud. That will generate a short signal. Based on a weekly, you wouldn't be looking for an entry point as soon as that kicks in because it could easily go up before it goes back down again, but that would be a short signal, and this is another thing that we'd be looking at. So not just a breakdown and closure below the 20 monthly moving average, so the center of the Bollinger Band on the 20 on the monthly. We will be looking for this short signal to take place, and then that would, for me, solidify most likely a much bigger move down. But for the moment it's holding. Again, is it going to hold for very long? I don't know. We've got 4 hourly bullish divergence, which is probably almost played out at the moment. It can obviously go higher. 4 hourlies can be quite powerful, but if we look at the rest of the chart on the 4 hourly, Bollinger Band top over here, I'm talking 39,000. Okay, fair enough. We've got the 200 exponential over here as well, 41,000. All of those are valid areas for this to be pushed up to, between now and, well, maybe towards the end of the week or so. But let's remember, like we've been saying this entire time, the bears do have control over the weekly anyway. They've got control over the daily as well. They've also more or less got control over the 4 hourly. They don't have control over the monthly yet, so that would, like I say, that would be a big deal. So the monthly is still in the favour of the bulls, which would suggest that until we break down or close below there, that this is all one giant massive consolidation, similar to the one that we saw in 2019, the one that we just looked at briefly on the other chart there. 2019 kicked in. We had a massive bull market, the beginning of a bull market, a parabolic run to the tune of 300%, and then a very long drawn out consolidation where it came down to 55%. So how far have we come down at the moment then in this consolidation? Okay, we have from the absolute peak to the absolute wick low 52% so far, so it's not even from the top to bottom, it's not been as dramatic as the one that took place in 2019. And again, if anyone was around for this, it was a boring summer. It went on for a long period of time, and then it went on even longer. It probably could have recovered if it wasn't for the old virus kicking in. Probably would have recovered at that level. Maybe not gone into such a fast, massive big bull run, effectively almost like a blow off top. Well, it kind of was a blow off top really at this level, and then continuation thereafter. So we've established that bears have control over most of the time frames, although the biggest one, the monthly, is still in favour of the bulls. We've recognised that we have had these huge rallies in the past and then long periods of consolidation, all within the context of a bull market or a continuation of a bull market. Look, we consolidated and effectively accumulated between 8 and 12,000 really is what we were doing over here. Like I say, if you've not been around for any of this, then I can understand that you look at that and it looks like a blip, but really when this was your Bitcoin chart, especially if people were getting involved here like I was as well, I thought we'll go hard and heavy into Bitcoin and create a YouTube channel, and I'll do all of that, and it was all around here. So we launched, we went crazy, we had a great time, and then we basically took best part of a year off really. Is what it felt like, a year off. We were able to trade altcoins with the Bitcoin dominance, but generally it was a pretty long drawn out boring event where we just went sideways more or less, and that is I'm not saying it's the most likely scenario, but it's not unlikely that that's what's going to happen here. Remember, 2019 so far did have a larger retracement, ever so slightly by a few percent. It was 55, we're currently 52 from this top here to this bottom here. I'm not saying that we can't come down further or even break down. This is why I made that video yesterday of the precursors to warn of such a large continuation, effectively, the continuation of an actual bear market. But for the moment, we're still holding on to dear life on the monthly, and that's one of the main things that we have to focus on. Sometimes, like I say, I appreciate if you've not been around for a while in crypto, or if you did get into crypto, it was with all of this madness and the alt season that came as well, and so it did feel like the only way is up and up indefinitely, and everybody's a genius in those sort of circumstances because everybody can make money. But the real money and the real crypto, for the vast majority of the time, is like this: choppy, up, down, sideways, kind of difficult to trade, and very occasionally we have moves like this, which is what I think is going on right now. We're consolidating, we're choppy, we're up, we're down, we're sideways. It's difficult. There's things going on outside of the chart which make it worse, but generally speaking, if we base everything apart, on the way that we saw this monthly, then it is. We've been here before, and we can entertain the idea of a further drop. We can entertain the idea of a wick down below here and being reabsorbed based upon news events. Like this was. We came up, consolidated 2019, found ourselves a base, started to move across, and then massive big wick below because of things that took place outside of the chart. If this was just based on the chart alone, probably would have consolidated to this level, reaccumulated, and actually got into a bit more of a slow and sustained uptrend because of things outside of the chart. We wicked all the way down and then just went straight to the bloody moon. So it's not too dissimilar from the chart that took place not that long ago. So it's not too crazy to expect good things from here. However, like we've already established, largely crypto can be like this, you know, choppy, up, down, and sideways, and I think that's where we're going. Now, for altcoins, it's going to be even harder to trade them, particularly in this environment, especially when the Bitcoin dominance is kind of in the center of what would appear to be a sideways range of its own, a tradable range of its own. I would be very much in favour of this moving all the way up and me going hard and heavy into altcoins, all kinds of stuff, you know, top cap, middle cap, small cap, the lot. That would be the safest sort of immediate trade. But as we see at the moment, you know, when Bitcoin has a good day in this nondescript kind of trading environment, altcoins have a good day. But when Bitcoin and crypto decide to take a stand, and whether it goes up or down with some kind of conviction, this chart will also do the same. This is most likely going to go up in the face of a bear market, you know, continued bear market. This would go up beyond here, and probably up to here, and maybe even beyond, you know, as altcoins get absolutely wrecked. While we're going sideways, this should also probably go sideways as well, with no major conviction. My eyes are focused on what's taking place in March with the first rate hike, all this sort of stuff. Things that we can tangibly say, okay, this is the deal, we can work around it. But until then, the uncertainty is one of the main things which is proving all these markets, not just crypto, but all the markets to be a very hard trading environment, unless you're a day trader that's prepared to sit at your computer all day clicking buttons. And obviously I've got potions to make, I've got hair bubbles to put in, I've got all kinds of stuff going on at the moment. Not for me personally, but it's half term, so I don't have that kind of luxury, nor would I really want it, because that's no way to live. But on the larger swing trades, we are looking for that clarification in March into April, where I really do honestly think that things are going to be going crazy. Altcoins, the more wrecked they get, the more appealing they become, and once we've got that clarification, if that seems to be the way I see it taking place, then kind of almost like blindly going into certain coins which have decent prospects would be a decent idea. So my eyes are still focused on March into April for actually some decent moves up, not just for Bitcoin but for altcoins as well. I've got plenty of available funds to bang into that, but for the moment it's this sideways choppy range, although that we can predict certain areas of maybe supports, especially the one that we saw yesterday. Thinking about, okay, well, risk to reward, Bollinger Band strategy, okay, the odds are in your favour, we could try it, but for a turnaround point, nah. I've done my buybacks for Bitcoin for now, 40,600, 35,000. That's enough for me for the moment. The rest of my money, the rest of my available capital is waiting around to see what takes place in March into April, where the way I'm seeing it generally does look like it's going to be pretty fruitful. But where is the price of everything leading up to that point? That's the main thing. Do we go down? Is there something that takes place outside of this chart which drags us down massively, similar to what we saw with the March crash? Could be. So for me right now, it's definitely a wait and see, but my eyes are very much focused on the charts leading into out of March into April, to see how not just traditional markets are working, but the correlation between traditionals and crypto are quite clear at the moment, and everybody's waiting for that kind of certainty, which in this very moment in time, there's so much uncertainty given what's taking place in the world. It's just difficult to put your finger on what's going to happen tomorrow. Do you know what I mean? But March into April, I'm very keen to get back in and like I say, throw some decent cash in, provided we do have that clarification. Right, I'm going to leave it with you there. I'll see you at the live stream tonight, guys, and thanks for watching. Hope you have a nice day. Take it easy.